Welcome to the Deep Dive. Today we're digging into the recent Q2 2025 earnings call for Evaxion A. That's the AI-immunology company really making waves in biotech. Our goal, like always, is to cut through the jargon, pull out the key info, and, well, get you up to speed quickly. We'll cover the financials, the big pipeline news, and how the market reacted, which honestly seemed a bit confusing at first glance. Okay, let's kick off with the headlines. The Q2 2025 numbers. Evaxion reported revenue of $0.04 million. Now, that's a pretty big drop, 76% year over year. And the GAAP loss per share came in at -2 cents. GAAP, of course, just generally accepted accounting principles, the standard stuff.
Yeah, and that revenue number, it looks stark, right? But you have to remember, this is clinical stage biotech. Revenue here is usually pretty minimal, maybe episodic from grants or, early deals. What's maybe more interesting is their operating loss actually narrowed a bit, down to $4.3 million from $4.6 million last year. But despite that, yeah, the shares closed down almost 6% after the call. Still, if you listen closely to management's tone on the call, the feeling was cautiously optimistic, let's say. It suggests investors might be weighing that immediate price drop against some pretty significant progress under the surface.
Definitely. And for any biotech, really, especially at this stage, cash is king, right? So as of June 30th, 2025, they reported $14.7 million in cash and cash equivalents.
Right. And that cash position, it ties directly into, honestly, maybe the biggest strategic move they made this quarter, on the balance sheet, I mean. In July, they finalized this debt settlement with the European Investment Bank, the EIB. Essentially, the EIB converted $3.5 million, that's half of a $7 million loan, into equity. They bought shares at $4.87 per ADS.
Okay, and this is where it gets really interesting. Almost unbelievable, actually. That price, $4.87, was an 89% premium over the stock's closing price on the day it happened. I mean, what does that even signal? When a big lender like the EIB takes equity at nearly double the market price, Is that just massive confidence?
It's a huge signal, absolutely, a really strong endorsement. Look, when an institution like the EIB, which is, very sophisticated, very careful, when they agree to convert debt to equity at almost twice the market price, they're basically shouting that they think the company's real value is way higher than the current stock price suggests. They're not just like getting rid of debt, they're actively choosing to become shareholders, making a big bet on the future. You really don't see this often in biotech. Usually these conversions happen at a discount or market price maybe. So yeah, it massively de-risks the balance sheet, sends a great signal to other investors, other potential partners. It really shores them up financially.
Absolutely. So this move, it instantly boosted their equity by about $4.1 million, simplified the balance sheet, got rid of a big liability chunk.
Yeah.
So, okay, with that stronger foundation, what about the cash runway? How far does $14.7 million plus this deal get them?
Well, you combine that strategic move with the cash they had, and it projects a runway out to mid-2026. And what's really key here for anyone watching is that this projection already goes past two potentially huge catalysts. We'll get to those. And importantly, this runway calculation doesn't even include any potential non-dilutive funding, money from future partnerships or maybe option exercises.
Right, non-dilutive funding being the gold standard, basically. Capital without giving up more ownership.
Exactly. So if those partnerships happen or options get exercised, the runway could stretch even further, gives them a lot more breathing room.
Okay, so they have a decent runway. The next question is always about the burn rate. How fast are they spending? What did the expenses look like in Q2?
So the guide for the full year, 2025 operating cash burn is around $14 million, which seems pretty manageable given their pipeline. R&D spending actually went down a bit in Q2 to $2.2 million from $2.8 million last year. They said that was mostly due to project timing and some efficiencies they found, but they did signal R&D costs will likely tick back up in the second half as programs move forward. General and admin costs were up just slightly, $2.2 million, partly due to capital markets costs related to that EIB deal.
Okay, so financials look significantly stronger, de-risked even. But the real excitement in biotech usually is the science, right? The pipeline. So let's switch gears. Let's talk operations, the AI-immunology platform, what's happening with their actual potential drugs. Their lead asset, EVX-01, that's the personalized melanoma vaccine, seems like it's making real progress.
It is, yeah. And some exciting news there. The 2-year efficacy data from the phase 2 trial, it's been accepted for an oral presentation at ESMO 2025. That's the European Society for Medical Oncology Congress. It's happening October 17th. This is, well, it's a big deal. ESMO is a huge global stage for oncology. Getting an oral slot there lets them showcase the vaccine's results to doctors, researchers, and crucially, potential big pharma partners. And yeah, an oral presentation usually means the data is pretty compelling, more so than just a poster.
That is a powerful signal, definitely. And they're not stopping there with EVX-01, right? They're extending the study.
Correct. They're gathering 3-year outcome data now, also looking at how it works as a monotherapy just on its own. And they said this is being done with minimal extra cost. Seems smart, just building a stronger data package.
Yeah, makes sense. And they're planning to talk to the FDA about the registration path, which is key for potential partners thinking about commercializing down the line.
Absolutely. But, stepping back a bit, what's really fascinating, maybe the bigger story even, is how their core AI-immunology platform keeps getting validated externally. Like, they just got a grant from the Gates Foundation to design a novel polio vaccine using their AI. Now, that's not just helpful non-dilutive cash, which is great in itself. It's a huge stamp of approval. I mean, it's a Gates Foundation, probably the most discerning, well-funded global health organization out there. This really broadens the conversation around partnerships and just highlights what their platform can do beyond just cancer.
And speaking broadening horizons, they've jumped into a new area too, right? With infectious diseases. A new program called EVX-B4.
That's right, EVX-B4. It's targeting a preventative vaccine for Group A Streptococcus, GAS. This is a big target. GAS causes things like strep throat, scarlet fever, but also, more seriously, rheumatic fever, which can really damage the heart. And incredibly, despite research going back literally a century to 1923, there is still no approved vaccine for GS. It's a massive unmet need. So Evaction's platform, just through initial computer analysis, has already shown it can find potential new vaccine targets for GAS, hints that maybe their approach can work where others haven't.
Wow, okay. And they're also moving forward with EVX-E1. That's their CMV vaccine candidate, right? Cytomegalovirus. CMV has been a really tough nut to crack for vaccine developers. What makes Evaction's approach potentially different here? Is it the AI again?
It really is. That's a great question because, yeah, CMV has stumped a lot of people. Traditional approaches often focused on just one part of the virus, like one specific glycoprotein. Evaction's strategy, guided by their AI, is much more comprehensive. A multi-target approach. They're identifying targets for both B cells and T cells, plus essential glycoproteins, trying to hit the virus from multiple angles. And their early data looks promising. They have this proprietary glycoprotein B antigen that showed superior virus neutralization and strong immune responses in animal studies. So yeah, it's that multi-pronged attack, finding diverse and potent targets with AI that gives them, I think, a better shot than methods that just focused on one piece of the puzzle.
Okay, so lots of scientific progress. That obviously leads to business development.
Right.
BD needs to be a top priority. What are they saying about partnership goals for the rest of 2025?
Well, management was pretty clear. They're deep in talks, multiple parallel discussions, actually, across both cancer and infectious disease programs. The goal, they stated, is ambitious but clear. Sign at least 2 new partnership deals before the end of 2025. They also mentioned some talks are, further along than others. Suggests a pipeline of potential deals is building.
And what about the existing big one, the collaboration with MSD? Any updates there?
Still on track is the message. The decision from MSD about potentially exercising options for EVX-B2 and EVX-B3, those programs are still expected in the second half of this year. Management sounded positive about how those discussions are going. And if MSD does exercise those options, that could mean significant non-dilutive cash coming in, upfront payments, future royalties, which, again, is huge for funding their research without selling more stock.
Got it. And quickly, before we move on, any changes on the leadership front?
Yeah, a couple of things. The search for a permanent CEO is still ongoing. Brigitte Renaud, the chief scientific officer, is doing a solid job as interim CEO, keeping the science on track. And on the finance side, they appointed Thomas Smith as the permanent chief financial officer starting August 1st. So stability there.
Okay, so let's try to tie this all together. We've got strong operational updates, right? Pipeline moving forward. We have a significantly de-risked balance sheet thanks to that really clever EIB deal, a solid cash runway. And yet, the stock dropped almost 6% on the day of the call. What's the disconnect here? How do you read that for investors looking at this now?
Yeah, that's the puzzle, isn't it? That divergence. Shares go down, but management sounds pretty upbeat, and the fundamentals look better. It really suggests, I think, that the market right now is very much in a show-me mode, especially for smaller biotechs. Investors hear the story, they see the potential, but they seem to be waiting for concrete proof, hard data, signed deals, before they really commit and re-rate the stocks significantly higher. The trading volume spike, about 2.8 times the average, shows people were paying attention, definitely. Even if the initial reaction was negative, it's like the market is saying, okay, Evaxion sounds good, call us when the ESMO data is out or when a deal is signed.
And that fits the broader picture in small cap and mid cap biotech right now, doesn't it? It's not just Evaxion feeling this.
Exactly right. The whole sector is still kind of choppy. Risk appetite for microcap biotech is selective, cautious. There was a bit of a rally earlier in Q3, but investors are picking their spots carefully, which just underlines how critical Evaction's upcoming catalysts are. They need to hit those milestones. Delivery is what will shift the story from, promise to proven value.
Okay, so let's hammer those key catalysts home one more time. What should people be watching for in the near term?
Right. Top of the list. October 17th, that oral presentation of the EVX-01 two-year melanoma data at ESMO. That's huge. Then sometime in the second half of 2025, the MSD option decisions for EVX-B2 and EVX-B3. Potentially big non-dilutive cash influx there. Plus, that internal target of landing 2 or more new partnership deals this year. Any announcement there would be major validation. And of course, any updates on finding a permanent CEO. Hitting these points successfully, that's what everyone expects will be the real turning point. Moving from potential to proof and hopefully triggering that re-rating away from the current valuation.
All right. Now for the part where we step back and brainstorm a little. Get a bit provocative. Remember, everyone, this is purely for discussion, for kicking ideas around. Definitely not anti-Asiator investment advice. We're just thinking out loud here.
Okay, yeah. So looking at everything, the stronger financials, the AI validation, these catalysts lining up, I have 2 ideas. Maybe a bit out there, but plausible, I think, based on what the market might be missing. Idea 1, call it the catalyst convergence long. My thinking is the market's reaction to Q2 was too focused on the immediate, maybe missed the bigger picture setup. You've got the de-risked balance sheet now. You've got cash confirmed past 2 major potential value drivers, that EVX-01 ESMO data on October 17th and the MSD decision later this year. And remember, getting an oral slot at ESMO, that strongly suggests the data is good. It's not just another poster tacked on a board. So if that data hits even moderately well, and maybe MSD comes through with an option exercise, boom. That could really change the stock story fast. So the idea is maybe you consider a long position now, before the ESMO quiet period kicks in, before MSD makes their final call internally. The price is depressed right now, despite the positive underlying news and management tone. It feels like an asymmetric bet. Downside seems somewhat limited by the cash in the balance sheet, right? But the upside from hitting those 2 big catalysts, potentially substantial.
Okay, interesting. Asymmetric risk reward focused on near-term catalysts. What's the second idea?
Idea 2. This one's maybe a longer shot. Let's call it the Gates Foundation validation spinoff bet. Think about that Gates Foundation grant for the polio vaccine. It's not just free money, right? It's huge validation, like we said, from a super credible source for the platform itself. And the company specifically said this could lead to more projects, and the news got a lot of attention for their AI-immunology tech. This hints that the platform itself, the AI engine, has enormous value that might be separable from the individual drug candidates. It's modular. So the outrageous but plausible idea here. Maybe a deep in the money long call option, maybe looking out to early 2026. You're betting on the eventual, maybe even just the rumor of a spin out or a major strategic partnership specifically for their infectious disease platform. Imagine like a big pharma partner or maybe even a Gates-backed entity creating a divvy or just buying the infectious disease assets outright. The market today isn't really pricing in that kind of platform level deal potential, I don't think. It's a bet on the underlying long-term structural value of their AI tech, kicked off by that big external validation from Gates.
Fascinating ideas. Definitely food for thought. So, wrapping up our deep dive on Evaction's Q2 2025, we've seen a much stronger balance sheet after that EIB deal. We've seen real pipeline progress, the upcoming EVX-01 data at ESMO, the new GS program, EVX-B4. There's a clear path and some big milestones coming up.
Yeah, the immediate stock reaction was maybe underwhelming, but the strategic moves they've made, the de-risking, the catalyst map, it paints a more cautiously optimistic picture, I'd say. Definitely worth keeping a close eye on those events coming in the second half of 2025. They could really be game changers for the company.
Absolutely. And as always, remember, everything we discussed here on Talk Tickers is just for informational purposes. It is absolutely not financial advice. You should always do your own homework, your own due diligence, and definitely talk to a qualified financial advisor before making any investment decisions.
Thanks for tuning in to this deep dive. We'll be back soon with more insights.